When people invest in Bitcoin, one question always comes up. Will it still exist in the long run? Could it still matter in 50 or even 100 years? Or will it eventually disappear? To think about that, it helps to zoom out. Money has never been static. At different points in history, people used salt, shells, precious metals, paper, and eventually digital bank balances. Today, most money is just numbers on a screen. In that context, Bitcoin isn't as strange as it first appears. It's another attempt to define what money is and who controls it. Since launching in 2009, Bitcoin has gone from an obscure experiment to an asset held by public companies, investment funds, and even governments. Some people now describe it as digital gold. But long-term survival depends on more than hype. If we look at technologies that have lasted, like gold, the internet, or email, they tend to share a few traits: scarcity, usefulness, adaptability, and independence from any single authority. Bitcoin checks many of those boxes. At its core, Bitcoin is an open network with a fixed supply of 21 million coins. Anyone can use it, anyone can run it, and no central party controls it. Thousands of computers around the world run Bitcoin software. Some of them, called miners, compete to add new transactions to the network. In return, they earn Bitcoin and transaction fees. Others run nodes simply to verify the system themselves. Running a node means you don't need to trust anyone else. You can check the rules and balances on your own. These incentives are important. Miners are motivated by rewards. Users are motivated by independence and verification. Together, they keep the network alive. Still, 100 years is a long time, and Bitcoin isn't risk-free. There are technical questions. Future technologies, like advanced quantum computing, could challenge today's cryptography. If that happens, Bitcoin would need to upgrade, something it has done before. There's also the question of mining rewards. Around the year 2140, no new Bitcoin will be created. After that, miners must rely entirely on transaction fees. Whether that will be enough is still unknown. Then there are social and political risks. Large holders, corporations, or governments may try to influence Bitcoin's direction. Communities can split. Coordination can fail. There's also a deeper question. Can a system built on fixed supply function in economies that rely heavily on debt and constant growth? Despite these challenges, Bitcoin has strengths that are hard to replicate. It's the most secure blockchain, widely studied, and extremely difficult to shut down. Power is distributed between users, miners, and developers. Imperfect, but resistant to control. Bitcoin can also evolve. Technologies like the Lightning Network already make transactions faster and cheaper, and future upgrades may expand its usefulness further. None of this guarantees Bitcoin will last forever. But even if Bitcoin itself didn't survive, it has already changed how people think about money, about control, scarcity, and trust. So the real question may not be whether Bitcoin will exist in 100 years, but whether the ideas behind it will. And once those ideas are out in the world, they don't disappear easily. Thanks for watching. If you've got questions or thoughts, drop them in the comments. We're happy to reply. At Mudley Group, we're building a space where anyone can learn trading, improve together, and feel supported, whether you're brand new or already trading. Follow the channel, like the video, and check the description for useful links. See you in the next one.